Hey everyone, Broadcom, ticker symbol AVGO, is scheduled to report quarterly earnings results after the markets close on June 12th. So investors are curious, should they buy the stock before the company reports earnings? As you're probably aware, earnings tend to have wild fluctuations on a company's stock price. Company can possibly jump by 20, 30, 40, 50% following an explosive earnings release. But the opposite is also true. A company's stock price could crash by significant sums if there's a disaster in the earnings report. So in this video, I'll preview what investors should know about Broadcom heading into the earnings release, and I will answer if you should buy the stock before June 12th. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so let's start with the overview. Broadcom is a global technology leader that designs, develops, and supplies a broad range of semiconductor and infrastructure software solutions. It's more so infrastructure software solutions lately because of a massive acquisition, which I will talk about a little bit later. The company offers thousands of products that are used in end products such as enterprise, data center networking, home connectivity, set-top boxes, broadband access, telecommunications, smartphones, base stations, data center servers, storage systems, factory automation, power generation, alternative energy, and electronic displays. Of course, the area getting the most attention lately is data center networking and data center servage and storage systems. This is because the nearly $1 trillion of infrastructure old data centers are now being upgraded so that they can be optimized for artificial intelligence. That's the big boom area in enterprise spending right now. Smartphone, of course, Broadcom has one famous customer, which I will also share with you a little later. All right, so I told you I would talk about the acquisition, and here it is. On November 22nd, 2023, they completed the acquisition of VMware for approximately $30.8 billion in cash and 54 million shares of Broadcom common stock with a fair value of $53.4 billion. So this was a massive acquisition for Broadcom. Of course, Broadcom has a history of making acquisitions, but this was the king of them all, an absolutely massive acquisition. Now, to pay for this, the company went out and borrowed nearly $30 billion in loans to make the payment, right? The $30.8 billion in cash. Instead of using their own cash, they went out and borrowed to make this loan, to make this purchase. So the company levered itself even more in order to make this acquisition. The good news is that Broadcom generates significant cash flow from operations, enough so that it can pay for this acquisition and pay for the interest expense that will result from the increased borrowing from this acquisition. All right, I shared with you that Broadcom generates significant cash flow. It's also been historically a very profitable business. You can see over the last decade, its operating profit margin has exploded from 30% all the way up to 48.54%. And its cash flow from operations has also jumped from a little under 15% all the way up to 38.7%. And I said those in reverse. The first one I talked about was the cash flow from operations. The second one was the operating profit margin. So significant economies of scale in the business. They've demonstrated that they can grow profit margin and cash flow as they grow revenue, and that's great news for investors. So the acquisition resulted in the company generating significantly more revenue from subscription services. So you can see that jump here in February 4th, 2024, $4.549 billion in subscription services in revenue. And in January of 2023, the same quarter the prior year, only $1.8 billion in revenue from that segment. So that's where the acquisition plays the significant role. That's where the company acquired VMware. They wanted to boost their subscription services side of the business. and they acquired the company for that reason. So it's also having a disruptive effect on the company's income statement. You could see here total operating expenses jumped from 1.9 billion up to 5.292 billion comparatively year over year. But a lot of these expenses were just acquisition related expenses, one-time fees for this acquisition. And following the acquisition, many of those expenses would drop off and the company's operating expense total will decrease. And that also caused the operating income, of course, to be cut in half because of that impact, right? It's always disruptive digesting an acquisition, but especially when the acquisition is this size. This was an absolute massive acquisition. All right, so I highlighted that Broadcom has one famous customer, and that is Apple. So they believe their aggregate sales to Apple through all channels accounted for approximately 17% and 20% of their net revenue for the fiscal quarter ended February 4, 2024 and January 29, 2023. So if Apple's prospects worsen, then that would be bad news for Broadcom, because having roughly 20% of your revenue from one customer is high concentration risk. And they also have nearly 27% of their revenue from WT Microelectronics. So these two customers, Apple and WT Microelectronics, account for roughly 45% of the company's revenue, or roughly half of the company's revenue. That's very significant concentration risk for Broadcom. Year to date in 2024, the company has outperformed the S&P 500 index. Its stock price is already up 27% compared to just 12.8% for the S&P 500. Now, Broadcom is trading at the most expensive valuation it has traded for when measuring by the forward price to earnings. It's currently trading at a forward PE of 24.48, much more expensive than at any point in time, going all the way back to July of 2021. So as I always say, earnings releases are volatile times for a company's stock price. It's more risky than usual. And unless you absolutely feel the need to, I typically advise not to buy before earnings, heading into earnings, unless I feel strongly that the company's stock price is so undervalued that there's a large margin of safety of buying ahead of earnings. I typically feel it's better to wait for the earnings to come out, digest the new information, and then make a decision, because at this point, there is so much information that's been released, not directly from Broadcom, but from all of these other data sources that have been released that are now getting accounted for in the company's stock price. So there's a lot going into this valuation that hasn't yet been reflected in Broadcom's performance specifically, which we won't know until the company announces its earnings and we get that information. Then we'll know precisely what's been happening at the company over the last couple of months. So Broadcom is one of those situations where I say, do not buy before earnings. Wait until after the earnings come out. Let's digest the information, and then we'll make a conclusion after that information is digested. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.